Stavros Tousios for M4Markets. Today we're going to have a look at the euro dollar and also the Dow Jones. There is something interesting that I spotted on euro dollar, and it's important to mention. That's why we're here. I'm not sure if you're familiar with a running triangle or the triangle itself, the ascending variation, but this looks like, because we have actually come and formed a double top over here, it looks like we might get a correction anywhere between 161.8% of this upward leg, and from there continue higher. We do see this signal over here, okay, and we have seen this decline coming, and at the same time now we have started moving up, while we also see somewhat of flatness in price, whereas the RSI is lower. So the moment we do cross, even for a spike above the previous high, theoretically, in theory, or in practice as well, the divergence will be valid. That means that we could do 111. This is like probably like some 4 or 5 pips above the current 50 pips above the high, and then from there start looking for a potential move to the downside, where 110 might be again something that we're going to see. Now, why, you might ask, I'm looking at this particular case? Well, I'm just looking at the sideways correction over here, and due to the overlap of all the structures, it just doesn't look like it wants to be anything else rather than something complex. So it means that we might be still correcting, okay? The only case for us to move higher, of course, would be for this, all of this leg to be something like of a move where this is a diagonal instead, okay? So we could go higher up. However, the issue I do have is that typically diagonals, they have a bit more of a slope. However, this is the only case I see playing out, okay? If we actually don't get the triangle case, okay? If we do see that turning into an ending diagonal, literally speaking, the moment we do cross above that high, the diagonal is going to be in. When I say diagonal, I also mean wedge, right? Some are familiar with different terminology here. If we get the wedge, that means we're going to probably go for a much larger correction, okay? That is probably going to aim anywhere between 38 and 62. And, that means, of course, a bit of a medium-term downside for euro dollar. Now, when it comes to the Dow, look, the Dow has gone up. Actually, I think we've kind of called that top of the channel. We've come and we've created a false break above that level as well, and taken out any sort of short positions above the 34.12 or so. Missed the previous high, and that sees a move to the downside. Now that looks impulsive. At the same time, guys, let's not forget we've got a very good signal here. Actually, we've got a double signal, and this is typically the signal I want to see for at least, I don't want to say reversals, but at least for deep corrections. Now, if that indeed goes deep, we have probably just confirmed the first corrective leg to the downside. We came to the 38, taking out both these lows, okay? And of course, we came down to around the 33K handle, and we start moving up. Because we have come down in 5 waves, that suggests a correction as an ABC and then further continuation to the downside, okay? If that plays out, it means that we can look for signals that would imply a downside continuation anywhere between the 33.55 and 33.84. Higher is not impossible, but most typically these are the zones that we're looking for. In an A, B, C correction, actually the 50%. So anywhere around 33.70 or so. Now at the same time though, if we did do that, and let's assume that we're going to do like something like of a 50% correction here, we should be looking then for the 100, which is around the 32.63. That will be a correction, and a reversal will be anything below it. Not anything, but chances would increase anywhere below that level. Now, there is also high potential for that to still be something like of it's called actually a flat pattern, right? That would mean that this is a wave 4. So this is the first, the second, the third, the fourth correction, and we're going to see further upside. That would probably go closer to the 35K. That, however, would be more likely a case if that low holds and will continue higher from here. Let's not also forget what else is possible for a more traditional sort of perspective is a head and shoulders. You've got a shoulder, the neckline, the head, neckline, another shoulder, and that would be down to 62. This is the typical correction for head and shoulders, and then further continuation. Let's not forget, guys, head and shoulders are not reversal patterns. They are continuation patterns. So usually they just pull back and then break to higher levels.